Hello and welcome to today's episode to deep dive into one of Sri Lanka's most iconic brands, Dilmah Ceylon Tea Company PLC. In today's episode, we are going beyond a cup of tea to explore how this family owned business directs the complex global tea market with a blend of tradition, innovation, and strategic. Dilmah is not just a tea producer, it represents authenticity, ethics, and a legacy of quality. Founded by Mary J. Fernando, this company has grown to become a global presence in over 100 countries, yet it retains a unique identity in the highly competitive beverage sector. Through the lens of their latest annual reports and market data up to 2024, we will unpack Dilma's strategic vision, internal and external environment, competitive positioning, corporate strategy execution, leadership culture, sustainability efforts, and of course, its financial performance. Whether you are an investor, industry observer, or simply a tea enthusiast, curious about business, this episode offers a comprehensive understanding of how Dilma steeps itself for long term success. So let's brave this story from the roots up. To understand Dilma's journey, we must first articulate its vision and mission, which underpin every strategic direction. Dilma's founder, Meryl Fernando, famously asserted that making business a matter of human service is at the heart of the brand's ethos. This is not a generic mission statement, but a deeply held philosophy emphasizing authenticity, ethical sourcing, and social responsibility. Unlike many multinational tea brands, Dilmah does not outsource its tea production or rely heavily on intermediaries. Instead, it practices vertical integration, controlling every step from the plantation in Sri Lanka to the packaging and marketing globally. This strategy safeguards quality and supports their positioning as a premium single origin tea brand. This vision of authentic, ethical business practices resonates strongly in today's market, where consumers increasingly demand transparency, sustainability, and social responsibility from brands. Dilma's strategic direction aligns with these trends by emphasizing not only product quality but also the social impact it creates through initiatives like the MJF Charitable Foundation. Let's now explore the external and internal environment impacting Dilma's competitiveness. Political and economical factors play significant roles. Sri Lanka's macroeconomic volatility, including currency depreciation and inflation, affects cost structures and export pricing. Trade policies, shipping delays, and geopolitical tensions, especially with key export markets, create operational risks. On the social front, changing consumer preferences towards organic, sustainable, and ethically sourced products benefit Dilma's positioning. Technological advances enable innovative packaging and production efficiencies, yet also increase competition from digitally native brands. Competitor analysis reveals a crowded tea market. Dilma's main competitors include global giants like Unilever's Lipton, Tata Tea, and various private labels. While these competitors benefit from scale, Dilma's differentiation is its authentic Sri Lankan origin, family ownership, and vertical integration, which serve as key competitive advantages. Turning inward, Dilma's resources includes its plantations, processing facilities, intellectual property in brand and product recipes, and an experienced workforce aligned with its values. Its capabilities in quality control, research and development, and global distribution are strengths. The company's innovation focus, evidenced by expanding wellness product lines and educational initiatives like the School of Tea, demonstrates dynamic capabilities to respond to tea market trends. The SWOT analysis highlights strengths such as strong brand equity, vertical integration, and social responsibility initiatives. Weaknesses include vulnerability to macroeconomic risks, a relatively narrow product portfolio compared to some diversified competitors, and the challenge of maintaining cost competitiveness. Opportunities lie in growing health conscious markets, e commerce expansion, and sustainable product innovations. Threats come from fluctuating commodity prices, geopolitical instability, and intensifying competition. Now we reach a critical segment, Dilmah's financial performance, which tells a rich story about its operational health, strategic investments, and market perception. Analyzing the financial data from the past 3 years up to 2024 reveals both challenges and strategic foresight. Starting with revenue, Dilmah's top line has grown modestly from 7.4 billion rupees in 2021 to 7.7 billion rupees in 2023, reflecting stable demand despite macroeconomic pressures. However, profit after tax declined from 1.89 billion rupees in 2022 to 1.7 billion rupees in 2023. This decrease is attributable to increased selling, distribution, and research and development expenses. In fact, research and development costs increased nearly 400%, signaling a conscious strategic reinvestment into innovation and product development rather than cost cutting. Looking at liquidity, Dilmah's current ratio rose from 4.8 in 2021 to 5.43 in 2023. This indicates excellent short term financial safety with more than enough current assets to cover liabilities. Yet, a very high current ratio can suggest cash or inventories are not being optimally used for growth, hinting at potential capital allocation improvements. Efficiency metrics show positive trends. Inventory turnover days improved significantly, dropping from 90 to 70 days over 3 years. Fast inventory turnover means better stock management and reduced holding costs, improving cash flow. Similarly, accounts receivable collection improved from 140 to 99 days, highlighting stronger credit management and cash conversion cycles. These gains in operational efficiency bolster Dilmah's working capital management. Asset turnover ratio increased from zero point 0.5 to zero point 0.8 times, meaning Dilmah is generating more revenue per unit of asset base, signaling improved utilization of resources. Leverage is minimal with a debt to equity ratio consistently below zero point 0.3 and an interest coverage ratio soaring at 34.4 times. This means the company carries very little debt and easily services its interest expenses, presenting low financial risk. Profitability ratios tell a nuisance story. Earnings per share fell from 288 rupees in 2021 to 242.77 in 2023, reflecting the short term impact of strategic reinvestments and cost pressures. However, this is not necessarily negative. It signals the company prioritizing innovation and long term growth over immediate profits. Dividends per share remained relatively stable, peaking at 200 rupees in 2022 and returning to 180 rupees in 2023, demonstrating Dilmah's commitment to rewarding shareholders even in tighter profit years. The dividend payout ratio remains healthy, reinforcing confidence in consistent cash flows. Return on equity dropped from 30% to 22%, still strong relative to industry norms, indicating efficient use of shareholders' capital despite reinvestment phases. Market performance data shows the price to earning ratio rising from 3.7 in 2021 to 4.2 in 2023, suggesting improving investor sentiment and confidence in future growth prospects. Although the price to book ratio fell below 1, 2.93, this could indicate the stock is undervalued, potentially a buying opportunity for long term investors. Analysts from Simply Wall Street have given Dilmah a strong buy rating, citing its blend of growth potential and ethical brand strength as key positives. Share price returns have been steady with a 5% gain over the past year and relatively low volatility, signaling market stability. Taken together, Dilmah's financial performance portrays a company's carefully balancing between short term cost pressures and long term strategic investments. Dilmah's commitment to environmental, social, and governance (ESG) principles profoundly impacts its strategic execution and brand positioning. Over 15% of pre tax profits are channeled to the MJF Charitable Foundation, supporting community development and education in Sri Lanka, reinforcing the company's founding philosophy of business as human service. Dilmah's carbon neutral certification reflects significant investment in sustainable agriculture, renewable energy, and biodiversity conservation. Social capital investment extends to employees. Dilmah's employee charter promotes diversity, continuous training, and leadership development, creating a motivated workforce aligned with corporate values. Strategically, the company executes diversification by expanding product lines into wellness teas and specialty blends while maintaining quality and authenticity. Their School of Tea initiative educates consumers and trade partners globally, strengthening brand loyalty and market differentiation. Leadership plays a crucial role in embedding these strategies. Dilma's family ownership ensures long term vision and cultural continuity, avoiding short term common in publicly traded firms. This holistic approach to strategy and sustainability positions Dilmah uniquely in the market, enabling it to direct global challenges while maintaining brand trust and operational agility. To conclude, Dilmah Ceylon Tea Company PLC exemplifies a business steeped in heritage yet adaptive in modern challenges. Dilmah's financial remains solid, underpinned by strong liquidity, prudent leverage, improving operational efficiency, and steady shareholder returns. The strategic reinvestment in research and development and sustainability initiatives positions the company well for future growth in emerging markets and evolving customer segments. Looking forward, the company should continue to optimize asset utilization and capital allocation to improve profitability while scaling innovative product lines and expanding digital channels. Strengthening global partnerships and enhancing supply chain resilience will be key to mitigating external risk. Importantly, Dilma's unique blend of commercial success and social responsibility resonates strongly with investors and consumers seeking brands with purpose. This dual value proposition will likely sustain its competitive advantage in an increasingly value driven global marketplace. For investors, Dilmah presents a stable, ethically grounded investment with promising long term growth. For consumers, it remains a trusted symbol of Sri Lankan tea heritage and quality. And for Sri Lanka, it's a flagship company embodying national pride and global influence. Thank you for joining this strategic and financial exploration of Dilmah Ceylon Tea Company. Stay curious, stay insightful, and until next time, keep brewing success in your own ventures.